Hi, this is Lara at Elliott Wave Gold with your daily analysis for Monday, 16th of February. I'm recording the video today, almost 4 p.m. Eastern Standard Time on the 16th Eastern Time. I was expecting a continuation of that consolidation phase that gold is in. That's what happened, but in the short term I was expecting downward movement for a B wave. We haven't got that yet, it's still to come. I'm expecting now 2 more days of choppy, overlapping sideways movement, which could include a new low to complete a sideways moving fourth wave correction. When this correction is done, the breakout should be downward, and the next wave down, the following fifth wave, might actually be quite long and strong. When the fourth wave has ended, I can calculate a target for the fifth wave down for you. Let's have a look at the wave count at the daily chart level. I have 2 wave counts and I consider them to have around about an even probability. This first wave count does not have as good a fit in terms of subdivisions and the ratios aren't as good, but the second wave count has a major problem. Both of my wave counts see primary wave 4 over here and primary wave 5 for the main wave count might be over here. If you're going to label from this high to this low, this movement as a completed 5-wave impulse, I think the best way to do it in terms of proportion and alternation is 1, a flat for 2, 3 has a ratio to 1, 4 is a double zigzag, and 5 has no ratio to 1 or 3. There are 2 problems with this wave count. The lesser problem is the subdivisions of intermediate wave 5. It has a cursory count of 7 at the daily chart level, which means it has a better fit as a zigzag. That's a corrective wave count. If you're going to see it as a 5-wave structure, with which a fifth wave may only be, then it can only be an impulse, and one of those waves looks like a 3-wave structure. In this instance, minor wave 3 looks like a clear 3-wave structure on the daily chart, and that's really unusual for gold. Its third waves almost always look pretty obviously like impulses. This one doesn't. But an even bigger problem is this running flat for intermediate wave 2. Running flat, subdivide 3, 3, 5. The problem is minor wave C looks like a pretty clear 3-wave structure at the daily chart level. I'm not prepared to entertain the possibility that minor C ends here. Sure, it would subdivide as a 5, but then we'd have a truncated fifth wave within a truncated C wave within a running flat. The probability of that is ridiculously low. So if we're going to entertain this whole possibility, intermediate 2 ends here. Minor C has failed slightly to move beyond the end of A, so it's a running flat. If you're going to label a wave count with a running flat in it, you better make sure the subdivisions fit, and this one, quite frankly, does not. So I have a really, really big problem with this wave count for that reason. And so the alternate it's entirely likely, but that too has a big problem. If we have cycle A over here, intermediate 5 is complete, and we have a 5-wave structure up at the daily chart level, a leading expanding diagonal. Within leading diagonals, the second and fourth waves should be zigzags. The first, third and fifth waves are most commonly zigzags. Sometimes they may be impulses. For this one, they subdivide as zigzags. Leading expanding diagonals, while not rare structures, aren't exactly hugely common either. Another slight problem with this wave count. When we have a leading diagonal in a first wave position, it's almost always followed by a pretty deep second wave correction, at least as deep as the 0.618 Fibonacci ratio, and quite likely deeper than that. Intermediate 2 is most likely to subdivide as a 5-3-5 zigzag, so I'm expecting minor A to be a 5-wave structure. It's subdividing as an impulse. We have 1, 2 lasted a Fibonacci 3 days. 3 is a nice clear 5-wave impulse at the daily chart level. That is really typical for gold. This is exactly what its third waves look like. They show the subdivisions for the second and fourth wave nice and clear at the daily chart level. 4 has so far lasted 3 days. I'm looking for it to continue now for 2 more days to complete in a total Fibonacci 5 days, giving it a 1.618 duration to minute wave 2. Draw this channel around minor wave A from 1 to 3, place a copy on 2. Let's have a look at this at the hourly chart level, where minute wave 1 down here, is this point down here. Minute wave 2 lasted 3 days. It was a relatively deep correction. It's a double zigzag. So given the guideline of alternation, I'll be expecting minute wave 4 to be more shallow and a more time-consuming sideways structure like a flat, combination or triangle. They're more time-consuming than single and double zigzags, so I'm expecting it to most likely last longer than 3 days, and a Fibonacci 5 is most likely. Because I'm expecting the least likely structure for minute wave 4 is a single or double zigzag, I'm not going to label minuet A complete here as a leading contracting diagonal, because minuet A is most likely to be a three-wave structure, because minute wave 4 is most likely to be a flat, triangle or combination. So the first movement is most likely to be a 3. So we probably have a 5, 3 may or may not be complete. We need another little 5 up to complete a zigzag up for minuet A. And when that's done, I will be expecting some downwards movement probably to show up on the daily chart as a red doji or candlestick for minuet B. When that's done, another 5 up for minuet C, or a three-wave structure for minuet Y. If we relabel this WXY if it's a double combination. I think what's most likely at this stage for minute wave 4 is a flat correction. They subdivide 3, 3, 5. The most common type of flat is an expanded flat where the B wave moves beyond the start of the A wave, so a new low below this point here is entirely likely, actually reasonably likely, as part of the sideways moving fourth wave correction. Minute 4 may not move into wave 1 price territory above 1251.97. It's very likely to end at or slightly above, maybe with a tiny overshoot of the upper edge of this pink trend channel, but it's very likely to end at this pink trend line. Draw the channel from 1 to 3 with a copy on 2. When the fourth wave is complete, I'll be expecting quite a long, strong fifth wave in this instance, because minute wave 3, although it looks like an absolutely perfect 5-wave impulse and fits nicely with momentum, was not 1.618 the length of minute 1. It was shorter than that. It's longer than minute 1, but it's not as long as the third wave most commonly is. So we might be about to see a more extended fifth wave in this instance, and sometimes they can be quite strong fifth waves for commodities. At the daily chart level, this is the alternate. I expect it has a roundabout an even probability with the main wave count. It has a much better fit in terms of structure and subdivisions. It has more common structures. The subdivisions are a better fit. It has better Fibonacci ratios. But it has a really big problem, the breach of this trend line. This maroon trend line is the upper edge of a big channel I'm drawing on the weekly chart around cycle wave A. I'm linking back every day in the text article to show you how I draw that channel on a semi-log scale on the weekly chart and copy it over to the daily chart also on a semi-log scale. If cycle wave A down is incomplete and its primary degree fifth wave is unfolding, then that channel should not be breached, because gold almost always adheres beautifully to its trend channels. Almost always, though, is not the same as always. Sometimes we do have small overshoots, but I'm concerned because this overshoot is several days at the daily chart level and one full weekly candlestick almost completely outside of it. That's a strong warning that the wave count might be wrong. If we see a 5-wave impulse over here, we have beautiful alternation between the triangle of 4, the zigzag of 2, ratios between 1 and 3 and 5. Now we have an expanded flat for intermediate 2. They are very common structures. They subdivide 3, 3, 5, and ending expanding diagonals are more common than leading expanding diagonals. So that's what I mean by the wave count here has a much better fit. If intermediate 2 is over here, then this downward movement is the early stages of an intermediate degree third wave down. That would be confirmed with a new low below 1131.09, because at that stage the main or first wave count would be invalid. If intermediate 2 were to continue any further sideways as a double flat or double combination, it can't move beyond the start of 1 above 1345.22. A new high above this point would invalidate this alternate and confirm the main wave count, which sees a trend change down here at cycle degree. If we have an intermediate degree third wave confirmed, it's probably going to be within the middle of it. Once we have minor wave 1, a complete 5-wave impulse down, this wave count expects a second wave correction up and then a third wave down. Minor wave 3 would probably take price below 1131.09. At this stage, the wave counts don't diverge. I'm expecting to see the fourth wave correction complete, followed by a fifth wave down. For both of them, I expect the fifth wave should be quite long. The first wave count sees this as A, B, C. This wave count sees it as 1, 2, minor 3. They subdivide in exactly the same way. Once we move into what could be minor 3 or minor C for the first wave count, I'll be looking carefully at momentum and depth of downward movement, and that will tell us which wave count's correct. At 956.97, primary wave 5 would reach equality in length with primary 1. Primary 3 has a 1.618 price ratio to primary 1, so if 1 and 5 were to reach equality, that would be very typical for gold, a typical Elliott relationship. And that's what gold does. It exhibits really typical Elliott relationships. We have, again, less volume today. This fits beautifully with the idea that these 3 green candlesticks are part of a consolidation phase for gold. From this high up here, since that date, the strongest volume days are on down days, supporting the idea that we've had a trend change up here, probably at intermediate degree. That's all for me today with your gold analysis, and I hope that all our members had an awesome weekend.